Well, hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. It's a Tuesday morning. Cues coming out of global markets are fairly positive. GIFT Nifty hinting at a fresh high for our Indian market as well. Lots of stocks in focus. We'll be talking about Infosys, Mankind, etc. And we'll also be taking up all your stock-related queries with our technical expert on the show. So if you have any queries, as usual, send them in to us on our YouTube feed and we will try and take them up. But before we move any further, let's take a look at the top headlines at this hour. Wall Street clocks a three-day winning streak with the Dow ending at its highest levels in January 2022. All eyes will be on the last FOMC meeting of the year, which kicks off today. In fact, investors will also be watching out for the November inflation print that comes out later tonight. Asian markets open higher with Nikkei surging over 1% in early trade. The GIFT Nifty is also suggesting a positive start for the Indian market. Among stocks in the spotlight today, Infosys will be in focus as CFO Nilanjan Rao resigns due to personal aspirations outside of the company. Infi ADR ends lower by 3%, while brokerages believe that the latest top-level exit may weigh on sentiment. Also in focus will be Mankind Pharma as PE giants are likely to sell nearly 8% via a block deal. And India's retail inflation is expected to inch up largely due to higher food prices and spike in prices of tomatoes, onions and other cereals. Headline inflation could once again come closer to the 6% mark. Meanwhile, October IIP data will also be released today and is expected to come in at 10.5%. Well, on that note, let me bring on board our technical expert for today. Joining me is Sacchitanand Uttekar, who's the VP Research, Derivatives and Technicals at TradeBulls Securities. Great to have you on the show, Sacchitanand. Looking at the screens, we saw a fresh closing high for the Nifty, just a shade below that 21,000 mark. But do you think right now, maybe there could be some signs of fatigue on the charts, or do you think we are expected to march on towards that 21,100 level today?
Good morning, Nandita. In fact, if you look at last few trading sessions, Nifty has been making attempts to close above the 21,000 mark. But, unfortunately, we have seen a sequence of narrow range bodies. So I think this particular sequence on a daily basis is a bit concerning. But there's also a fact that, for the last 26 trading sessions, the Nifty has been holding well and respecting its 5-day exponential moving average support, very well. So I think unless we don't see the Nifty slipping below 20,870 on the spot levels, we may not see major exhaustion in this particular trend. But on the higher side, there is a lot of cluster resistance available at around 21,000, 21,040 kind of a zone. So we are not really optimistic on the market momentum. We may see, a quick move towards 21,040, and probably we may see some pause in this particular momentum. So going forward, if you look at most of the trend stand indicators, they have already reached their overbought kind of a zone. We have the daily RSI, which is placed at around 84. The ADX is trending at around 62. And yesterday, if you look at Nifty put call ratio, it has almost reached 1.5 levels. So I think in case if we see a jump up about 21,000, one should not get excited. Probably it will be a good time wherein some profits could be taken off from the table. A trailing stop loss mechanism could work, but I think the level to watch out on the higher side could be around 21,040 to 21,080 when it comes to profit booking. But on the lower side, in case if we see Nifty slipping below 20,930 on a closing basis, then probably we may see some distortion in momentum. When it comes to Nifty Bank, a very similar setup. It has been holding on to its 5-day exponential moving average support, which is placed somewhere close to around 46,870. So major change in trend will only unfold in case if this particular level is breached on a closing basis. But if you look at the intraday data, I think 47,000 has been holding on. It has been providing a lot of support. So 47,200 remains a key pivotal for the day. And on the higher side, we see Nifty Bank scaling towards 47,800, 48,000 during this particular week itself. So I think if you look at both the indices, Nifty Bank has some promising signs. Probably Nifty is something which could be on a cautious note. So in case if we see a move above 21,040, 21,000 levels, I think that will be a good time to book some profits.
All right, those are the levels to watch out for, and perhaps you could also look at, booking some profit. But with that, hold that thought, Sacchitanand. We'll talk about specific stocks in just a bit. Let me also bring on board Hemang Jani, market expert, to take stock of some of the stocks that are on my list this morning. Starting with the big one, great to have you on the show. First of all, Hemang, good morning. Starting with the big one, Infosys, we've had a senior level exit there. CFO Nilanjan Roy has tendered his resignation, and this, comes in with a spate of resignation since the start of the year, right, at Infosys. Do you think this will just be a near-term dampener, or how would you approach this particular stock right now, given the fact that we saw some bit of reaction coming in on the ADR last night? And also, the chatter that, the recovery in IT companies may get delayed by a couple of more quarters as there is no on-ground improvement in demand scenario. So how does all this bode for a stock like Infosys at the current juncture?
Hi, good morning. So I think I'm a little surprised by the reaction in the ADR of the CFO exit, because it's not as if that there was any corporate governance issue or anything that would make investors a bit uncomfortable. I think in a large organizations like Infosys, unless you see very top level management exits or an incident which involves corporate governance, I don't think this kind of a reaction is warranted. So to that extent, I think if you see a little bit of knee-jerk reaction today morning, I think it should be used as a buying opportunity. Now, talking about the view on the IT sector per se, I think revival is something which is definitely on cards, both in terms of the valuation getting attractive and the external environment getting better. So I do think that we should surely position ourselves to accumulate more of some of the large cap, some of the mid cap companies in the IT space, because the risk reward clearly looks good at when there is going to be a sector rotation, let's say from a power, cap goods, banks, auto. The natural flow of money will be towards IT, metals, so on and so forth. So I think from that perspective also IT looks quite interesting.
All right, that was about IT. Use dips or knee-jerk reactions on Infosys as a buying opportunity. But let's also talk about a Dr. Reddys. US FDA setback coming in. Some of the observations, according to some brokerages, are pretty severe and could attract a warning letter as well. And just a few days ago, we also have had Cipla, getting a warning letter for its Pithampur unit. Amid all these US FDA issues, should one really avoid pharma at the current juncture? Perhaps focus in on more India-focused, players that have more India-focused businesses? Or how would you approach some of these large-cap pharma giants right now?
I think if you look at the observations, I don't think they are of very serious nature. Of course, couple of points are slightly disturbing, but I don't think the observations involve data integrity issue in a big way. This particular plant, Telangana one, accounts for almost about 30% of the revenue. But what is important to note is that the new approvals only could get affected, and the existing ones will continue to operate normally. So a 5% cut on a large cap company, again, is a bit of a surprise. So I definitely think that given the generic markets, the stability, the price strength, the new product pipeline, 5% is a great opportunity for investors to buy into Dr. Reddy, because the sector is seeing revival.
All right, that's the view on Dr. Reddy's and, the pharma sector per se. But what about, IREDA? We've had this stock 165% up from its IPO price. It's a pure play green financing company, but PFC, REC, the likes of these companies are also entering into green financing as well. So would you say that valuations for a stock like IREDA looks pretty stretched at the current juncture, and perhaps investors should look at a PFC, REC? Or do you think, despite the run-up, IREDA looks interesting and one should in fact stay invested and not book profits at the current juncture?
So Nandita, I think this entire green power theme is catching up big time, and any name associated with that, be it finance company, be it the company which is expanding capacity, you will find that the momentum is pretty much visible there. So I think from a momentum or trading perspective, that sector is looking great because of the kind of attention it is getting in the overall expansion in the capacity that we are looking at from 280 gigawatts to almost about 500, 600, and so on and so forth. But from an investment perspective, I don't think we should really go to gung-ho on that at this point, at this valuation, because it has moved beyond any valuation logic, right? So, IREDA, I would not buy at this level for sure. PFC, RFC, REC, a little bit attractive on valuations, but not great companies. If you have a dividend yield as a main primary reason, you could possibly look at it. But be a little careful when it comes to investing in that sector from a 1 or 2 year perspective.
Lastly, I want to, talk about a Polycab. I mean, phenomenal run, 120% kind of an uptick on a YTD basis. In fact, it has unseated or dethroned Havells as well in terms of market capitalization. It has delivered positive annual returns ever since it listed, and this stock particularly is garnering a lot of interest. Do you think going forward this stock has the potential to be included on the index as well? I mean, how would you view this particular stock? Do you think good times ahead lie for a Polycap?
Great performance. The market is rewarding the kind of performance and the consistency with which they have delivered. It got included into a certain MSCI indices. But my concern is that in that space, the valuations have really gone too far, right? So in a market phase where the midcap frenzy is there and certain PMSs or large investors are holding, you might see the flow come through, and that would take the valuations far-fetched. But I'm not comfortable buying into it. You have got plethora of options when it comes to great companies at a slightly, better valuation. Why not go for that rather than chasing something which has already gone up so much and quoting at some very high valuations?
All right, valuations looking stretched for a Polycap. With that, Hemang, thanks a lot for taking out time and joining in and sharing your insights on so many stocks with us. Look forward to touching base with you sometime soon. Well, with that, let's go back to Sacchitanand and talk about specific stocks. Stock of the day today, Mankind. Of course, there will be a block deal in the counter today at around market open. Around 3 to 4 PEs are exiting the stock, and could be a selling stake somewhere around 7.9% or thereabouts. For a Mankind, how is it poised on the charts? We also have a query coming in from Debu K, who wants to understand your views on this particular stock. What are the levels you'll be watching out for, particularly for today?
So particularly for today, I think 1900, 1880, I think these are the support levels that one should watch out for. On the higher side, it has been facing resistance and continuous supply pressure at around 2010. So the reaction which has come in, looks like a double top kind of formation, and that's why probably we may see one more, day of a decline. So I think 1880 is something that could be critical from a closing point of view. But overall, I think the structure is more towards sideways now.
All right, sideways trade expected for a Mankind. Let's talk about a Dixon Tech. Stock was up yesterday, 7.5%. Now there is news flow that it has, won a contract from Lenovo to manufacture laptops, notebooks under the PLI 2 scheme. Stock has already run up quite a bit. Over the last 5 days or so, it is up 6%. But yesterday, it was pretty much buoyant. Would you expect some bit of profit booking to kick in today, or do you think it is expected to move upwards from here?
Nandita, we are expecting this particular move to unfold, eventually towards 72.40, 72.80 kind of a zone. So there's a good amount of upside which is still available. If you look at the recent, sequence, clearly the higher top, higher bottom structure has been maintained well. It has been forming higher bases on regular time. So recently, we saw a very strong base formation at 5200. From there, we saw a lift off. Again, a consolidation breakout, and the base has now, elevated towards 6,000 levels. So until unless we don't see the stock, slipping or closing below 6,000, are we expecting that this particular momentum should continue? It's a classic bullish flag formation, a continuation pattern breakout, and the pattern is also indicating an immediate move, somewhere close to around 6,600, 6,650. So we are expecting this particular momentum to continue, and eventually the stock is expected to move towards 70 to 40, 70 to 80 kind of a zone.
All right, that's the view on a Dixon. But what about a SpiceJet? I think over the last two sessions, the stock is up nearly 30%. It has, of course, deferred its results and fundraise, plans. In fact, considering its fundraise plans to today, it was supposed to come out with its earnings yesterday, but that got deferred to today. But after a 30% up move in the last two sessions, what should really investors do? Should they book profits?
Ideally, yes. In fact, if you look at the move, the stock has been scaling higher for the last 6 weeks, and continuously, it has moved away from its 5-day exponential moving average. Now, currently, this particular average is placed somewhere close to around 53.50. So, on an immediate basis, we may see some bit of consolidation here. But on a weekly basis, there is a good amount of resistance or a supply zone somewhere close to around 67, 670 kind of a zone. So we may see some, supply pressure getting, mounted here, and probably we may see the stock again showing some signs of correction. So it's ideal to book some profits here and keep a trailing stop loss somewhere close to around 53 to 50.
All right, that's a view on a SpiceJet, but couple of queries coming in from the defense pack. Funny PG wants to know whether it would be the right time to buy into a Bharat Dynamics, and Jami Prashant wants to know if he can add HAL, Hindustan Aeronautics, at current levels. Both these stocks have seen up moves in the range of 25 to 35% just over the last 1 month. Do you think right now is the time to enter, or do you think you should wait out for a dip and perhaps then look at an entry point?
For HAL, definitely, one should wait for a decline. It has been trending above its 5-day exponential moving average, but if you look at the weekly structure, the weekly 5-week exponential moving average is placed somewhere close to around 25-30. So there's a substantial gap between the prices and the actual price action wherein the stock is oscillating right now. So we may see a decline towards 2600, 2620. I think that will be an ideal level wherein HAL can be considered. When it comes to BDL, a very similar structure. But currently, if you look at the weekly, monthly charts, recently we saw a breakout from a rounding bottom formation somewhere close to around 1240 levels. So I think if he is comfortable keeping a stop loss somewhere close to 1240, then I think even at this juncture, the stock can be accumulated. In case if we see a consolidation, the probable zone could be somewhere close to around 1285 to 1350. So I think that will be a good level wherein the stock can be accumulated. Eventually, we see this particular stock scaling towards 1640.
All right, 1640. That's the kind of up move that Sacchitanand sees on a BDL. But let's talk about a Subros. Stock was, stock hit a 52-week high yesterday, up 10% in yesterday's session itself. We have a query coming in from Naveen, and he wants to know whether or not one should, buy into it, or if one holds the stock, should they take profit at the current juncture?
Well, it's a classic, bearish bell-toll formation. We've already seen a good amount of supply pressure here. If you look at the historical evidence, 520, 530 has been a distribution zone for the stock. So probably, we may see some bit of a correction coming in eventually. But, if you look at the major structure, it still remains very strong. It has a very strong base at around 420 levels. So unless the stock trends above it, the probability of this move getting continued towards 650 remains high. So I think one should utilize declines, to accumulate this particular stock. But it's better to, avoid chasing momentum. If one is holding on to, aggressive long positions, then probably some profits may be booked here, and the stock should be, considered, or re-entering should be considered somewhere close to around 470, 465. So.
All right, to look at re-entering at 470, 465. Hope that answers your query. The next one is coming in from Kartikeya Singh, and he wants to know your thoughts on a solar industries. The stock has come off quite a bit after hitting a high of 7,800 and thereabouts. It has rebounded to 6,600, but can it be accumulated at current levels, or should he wait to enter into the stock? This is coming in from Kartikeya. What would you advise him to do?
Well, it's a good time to get into the counter, even if we see further slippages towards 6200, 6180. I think the stock can be accumulated in one's portfolio. Overall, if you look at the trend, it looks very well trending within a secular bull run. It has been holding on to its 5-month exponential moving average very well. We have so far not seen a close below the same. So the support level is well defined at around 58.30. So unless we don't see this particular stock closing below 58.30, the trajectory still remains on the bullish side. We have recently seen a decline from the levels of around 7,800 to 6,000 levels. So I think the major part of the corrective seems to be done. In case if we see again some further slippages, the stock can find support somewhere close to around 61.40. So I think it's a good time wherein the stock can be considered in one's portfolio. Keep a stop loss somewhere close to around 61.10 on a weekly closing basis.
All right, that's the view on the solar industries. Hope that answers your query. Much of the correction is out of the way when it comes to this particular stock. But the next query is coming in from Nisha Pradeep, and she has a query on Tata Power. In fact, she's sitting on a 40% profit right now. Would you advise her to book profits or hang on, book partial profits? How should she approach this now?
Nandita, in fact, a clear-cut disclosure from our end. Yesterday we have advised our clients to book profits here. We were anticipating a move towards 330 in a year's time, and this particular move has unfolded in a matter of a matter of 2-3 months itself. So the move has been very rapid. We have already seen the stock hitting its overbought kind of a zone. So probably it's a good idea to take some profits off. In case if she wants to hold on to the counter, then probably she should keep a trailing stop loss mechanism. The 300 base now looks very strong, so she can keep a stop loss at around 305 on a weekly closing basis, and probably try to participate this particular momentum till 350. But we are not expecting any major move on an immediate basis. Probably on a corrective, we may review this particular stock. But as of now, it's better to take some profits off.
All right, better to take some profit. Hope that answers your query. In fact, even Jeevan had a query on Tata Power. So hope this answer helps you as well. But let's also talk about GMR Airports. Now, this stock has been, seeing a lot of momentum on the charts. Especially there was news flow as to the fact that GQG Partners has bought a stake. Vijay C wants to understand whether one should, look at this particular stock, or is it time to chase momentum here as well? What would you advise investors who are planning to look at this particular stock?
Well, if you look at last 2 quarters, the stock has already seen a substantial up move of close to around 50-55%. And the base, now looks very good, somewhere close to around 62. So probably keeping a stop loss on a weekly closing basis at 62, one can, continue to hold on to the particular counter. If you look at the weekly, monthly RSI, they are still at a comforting zone. Despite of being in the overbought territory, there are no signs of any, exhaustion or divergence. We may see this particular momentum getting continued towards 80-82 kind of a zone. So I think it's better to accumulate this particular counter with a stop loss at around 62 on a weekly closing basis.
Couple of queries coming in on, the sugar pack, the likes of Praj Industries, Balrampur Chini, they have seen quite a bit of a sell-off after the ethanol curbs being put in place by the government. People want to really know whether this dip, the dip that we are seeing in sugar stocks for the likes of Praj Industries and Balrampur, would you advise them to use these dips to buy into these stocks?
Well, Praj, I would rather wait, because the stock is now at a very critical juncture. It has been trying to defend its weekly 20 exponential moving average, which is placed somewhere close to around 540. So any further slippages below the same, and the stock may see a collapse towards 460, 470 zone very quickly. So I think it's better to avoid any fresh aggressive long positions here. In case if someone is holding on to existing long positions, then 535 should be the stop loss. But when it comes to Balrampur Chini, we have already seen a very substantial vertical a declining move. It has again slipped below its 200-day exponential moving average. Now, if you look at the major structure from February, it was maintaining the sequence within the upward rising channel. And recently, we have seen this particular channel getting breached. So I think it will be very critical for the stock to, revive above that 430 mark. In case if it fails to do so within a week's time, then probably we may see this particular sell-off getting continued, and the stock may slip eventually towards 340, 360 kind of a zone in few weeks.
Right, a couple of last queries for today. One is coming in from Yagnesh on ICICI Bank and HDFC Bank. In fact, he says that the charts are indicating overbought zone. Should one wait for more dips to average further, or do you think this is the right time to buy into these stocks?
When it comes to momentum, I think we may see further legs when it comes to ICICI Bank. We may see a quick move towards 1,040, 1,035 kind of a zone. It looks like a very decent, bullish flag breakout. Even on the 30-minute scale, the support is evident at around 1,000 levels. So unless the stock trends above the same, the probability of a move extending towards 1,035, 1,040 remains open. When it comes to HDFC Bank, we've already seen a major move unfolding last month. It is now trending closer to the resistance zone of around 1680, 1700. So probably even here, it's ideal to remain cautious once the stock starts trending near around 1680 zone. But as of now, the momentum looks intact. HDFC Bank could see some selling pressure or profit booking pressure in case 1640 is breached.
Right, before I come to your picks, one last query. This one is coming in on a GSFC from Rakesh. He can hold on for 6 months. Would you advise him to buy?
Certainly, yes. The stock recently reconfirmed, the breakout zone at around 180. It looks like a classic cup handle formation, which has got activated once after the breakout at around 180 levels. So the pattern target is placed somewhere close to around 240, 275. And that's why we believe that any declines, in this particular counter should be utilized to create some long positions. On an immediate basis, we may see a swing towards 245, but eventually we see this stock scaling towards 280.
All right, that's the view on a GSFC. But with that, we've come to the end of the query segment. But before I let you go, Sacchitanand, what are you spotting on the charts, in terms of recommendations for our viewers?
Nandita, we saw some good moves in the cement pack yesterday. From this particular pack, we are liking Ramco Cement. There's a bullish flag formation breakout established yesterday. So we are expecting this particular momentum to eventually continue towards 1,060, 1,100 levels on a positional basis. And that's why we are recommending building long positions here with a stop loss at around 1,010. The other stock on our radar, which we have recommended to our clients, is Coforge Limited. When we look at Nifty IT, it has managed to surpass that September high. Even if you look at the daily chart structure, there is a classic continuation bullish flag formation here, which has already got activated. We are expecting this momentum to continue towards 6030. And the stop loss should be placed somewhere close to around 5820 while chasing this momentum. MGL is one particular stock which has seen a vertical rally recently, and it has managed, to surpass that 1140, 1160 cluster zone. So we're expecting this particular move to extend towards 1260 eventually on a positional basis. That's why we are recommending, building long positions even in MGL, keeping a stop loss somewhere close to around 1165.
All right, those were the recommendations coming in from Sacchitanand for our viewers. With that, Sacchitanand, thanks a lot for taking our time and joining in, and of course, addressing all our viewer queries so patiently. Well, with that, we've come to the end of this edition of Morning Trade. From me and the entire team, thanks a lot for tuning in. But don't go anywhere, because coming up next is Opening Bell.